Have you ever wondered how insurance companies calculate your life insurance premium? Before I was in the industry, I kind of just thought, everyone pays the same price. It depends on how much cover you have. This is actually very far from the truth. They do take into account what cover you have, but there's a very hardcore actuarial science that is used to determine what your premium is. This is why actuaries study such difficult degrees so that they have the skills to be able to do this for us. So the first thing we need to understand to be able to understand our premium is what is life cover. It is a amount of money that the insurance company will pay to your dependents, to your beneficiaries, in the event that you unfortunately pass away. This will be used to help them keep living the lifestyle that you've provided for them. It will also help them settle your estate, settle any debt. So the first part of our life insurance premium that we need to calculate is the risk premium. So this is where the actuaries will use mortality tables, and they'll actually determine what is the chance that you would actually pass away in this given year. So that is your mortality rate. So you'll see I've got two different examples here. I'm going to show you the difference between someone who smokes and doesn't smoke, because these are some of the factors that they take into account to determine your mortality rate. It'll also be things like your other health factors such as BMI, your drinking habits, if you have done recreational drugs in the past, things like that will all be taken into account. They also look at things like your credit score, your qualifications. There's many different things they take into account. That's why I said it can become very complicated. So for the first example, if we look at our non-smoker, let's say that they were 35 years old, they're applying for R1 million life cover. The actuaries come back to us and they say, okay, there's a mortality rate of 0.15%. That was your chance of passing away this year. Therefore, your risk premium, which is the first part of our whole premium, comes to R1,500 per annum per year. Now, this is not where your premium ends. There's obviously expenses that need to be accounted for. Part of the process in applying for life cover is called underwriting. This is where you will be assessed through medical tests. There can be other things as well. Someone has to pay for these tests. The insurance companies will pay on your behalf, but they need to recover those expenses. So they'll work out how long they assume that you will be on their books for. They price that into the premium. There will be expenses added on. This will also be used to pay staff, admin staff, people like that. Now, we must always remember insurance companies are businesses. They do need to make a profit. Otherwise, how are they supposed to pay us when we need to make a claim? So they will always add a small profit margin onto your premium. For the example here, I use 10% as a profit margin for them that will get added to your premium. For the expenses, let's just say that all came to R500 for the year. That would also obviously have been added on. Now you might say, what happens if I don't claim? Where do my premiums go? Well, the insurance company actually invests these premiums into the market. They will receive a return on that. And the reason why they do this is it actually helps make your premium cheaper than it should be. Because they're earning a return, they subtract that from your premium. Obviously, they'll have to forecast this. They use future values, things like that. But for this example, let's say that per year, your premiums would bring back R100. They will subtract that from your overall premium. So for our non-smoker who was 35 million life cover, once all that's been taken into account, his premium will come to R2,100 for the year, or R175 per month for his life cover. Now, if we move on to our smoker, we'll see these are where things get slightly different, but the concept's still the same. The only real change is his mortality rate. Now, this is where the actuaries will say, okay, this guy smokes. They look at the rest of his lifestyle. They'll say his mortality rate is double what the non-smokers was. So instead of it being 0.15%, it's now going to be 0.3%. That is the only change to the premium. The expenses won't change. Investment returns are investment returns. It doesn't matter if you're a smoker or not a smoker. So everything else will remain the same. The profit margin will still be the same. The smoker's premium will now be R3,700 for the year, or R308 per month. Now, this is where a lot of people will say, hey, that's a bit unfair. Why do I pay almost double what the non-smoker does? Unfortunately, this is where the science comes into place, and this is where they had determined that the mortality was double. However, your premiums are not set in stone. If you want to make changes to your lifestyles, as in quit smoking, lose weight, become more physically active, just adopt a healthier lifestyle. If you go back and study, get higher qualifications, you can reapply when you service your policy, and you can actually go back down to the lower rates. So it's not the end of the road. There's always room for improvement, and we must remember that your premiums will always adjust for your current lifestyle as well. You will obviously need to inform the insurer should any changes happen, and you must always be fully transparent with your disclosures. So I hope that this video does give you a lot of clarity and a bit of peace of mind. If you would like to see more videos like this, please let me know in the comments, share this video, like, subscribe, it all really helps. I do enjoy getting feedback from a lot of you guys, so please continue to do that. And I would love to make more videos like this for you.